And especially when it's the Wednesday that Karl is here. It's all about funding, and there's so much to funding that whether you're just at the beginning or very experienced, I'm sure you'll gain a lot of quality knowledge and experience from Karl. And Karl is actively in the marketplace, so he's not just uh, having opinions about things. He's actually relevant and doing things on a regular basis. And from the conversations I've had, very diverse, covers a lot of area, and so thankful to have Karl. Today's keyword or focus is going to be qualifying, because that's essential to finalizing whatever transaction you're looking to develop or create. With that said, a chat's wide open. We've been having pretty lively chats lately, and encourage everybody, especially if you're new, kind of share who you are, get recognized, build the networking capabilities that this program and LinkedIn has. With that, I'm going to turn it over to Karl to get a quick update and also first thoughts on qualifying.
Sure. Thanks, Don, for having me on your show this morning. Always happy to have the opportunity to talk about my favorite subject, which is raising funding. This is a task that a lot of people don't like. It's kind of like taking out the garbage. It's something you have to do, but that doesn't mean you have to necessarily like it. But I had a guest on my show yesterday, Successful Funding. Lucas Marcotte, who does books and records and financials, which is something I don't like at all, but it is also an essential task. So today we're going to talk about qualifying, and it's a really perfect topic because as you see behind me, I've got motivated money on the wall. I may have to reverse my image, but I'll wait till I get done talking to figure out how to do that. But I believe that when you're raising capital, when you're raising funding, the people you need to talk to are the ones who are most likely to invest. These are people who have the highest motivation, and with that self-interest, they're most likely to invest. And the reason why this is critical, and this is where we get to qualification, is that unfortunately, most businesses go out and pitch to other people, investor candidates, who will never invest for one reason or another. They don't have the money, they don't care, this is the wrong topic, wrong time, wrong something. And so the small business who has very limited resources is wasting those resources by talking to the wrong people. So before starting even the design, the offer of your capital campaign, you need to think about, well, who's the target? Who's the customer, the investor candidate you want to talk to? You need to know them, why they're motivated, what drives their self-interest, and then, only then, should you start crafting the offer and planning your capital campaign.
Well, that makes sense, and it sure is probably a factor of the experience that you've had. With that said, want to introduce our first commenter, Leslie Flowers. Dear lady, has a heart of gold and shares so much and supports so much, helps everybody get their word out as far as their shows. Leslie was able to just help Karl with being able to mirror camera. And I suggest if you have an opportunity, catch Leslie's Think and Grow Rich on Fridays and her audio event, Mind Over Matter, on Mondays. You won't go wrong, and you'll meet a lot of interesting people who may be able to help yourself on your journey. So thank you as always, Leslie. There's only one Leslie Flowers. Make a connection with her. You'll be happy. We've got a LinkedIn user. Good morning. The entire Wednesday you have to run, but want to stop by and say hello, have another great conversation. I think that might be Jason Gerardo. Always trying to figure out the LinkedIn user. If it's a joke, I know it's Carrie. Dennis is here, one of our everyday favorites who brings so much knowledge and insight. Funding is fun and dings with small businesses. So good to see you, Dennis. And I think qualifying, can be related to preparation. right? So, you need to have things in order. If you don't understand it, it's going to be very difficult for a person who doesn't know you or understand you at all to start understanding what you're putting together. And first impression is a very important impression. So how you're organized, how you present what you have, having it a little bit more defined, because time is of the essence for all parties. And I'm sure a lot of investment groups or parties want to see things in a way they can understand them faster, don't want to dig too deep into the minutia at that point, and want to know kind of who you are by how you present yourself. And I think that's so important. So, what are the key uh, attributes to putting together something that will lead to hopefully a successful funding event by your preparation and how you go to market and how you anticipate being a qualified individual?
Yeah, so what I want to do is I want to talk to the people who are most likely to invest. I don't have time to talk to everybody. That's more for entertainment or social gatherings. When I'm professionally trying to get a campaign done as quickly as possible at the lowest cost and still be successful. And so when I go to talk to someone who's an investor candidate, I've already done my preparation. And my preparation means that I've already figured out who they are or why they care if I don't know them already personally. And I'm already crafted an offer that I think is going to really, hit the hot buttons with them. And if they care about the environment, they want to deal with climate change, I'm not going to start talking about returns on investment out of the gate. I'm going to start talking about, how this product somehow is going to help the planet somehow, some way, because that's what they care about and that's what they want to hear about. Because if they don't hear that first, then why should they pay any attention? Why should they invest their time to read all the other material that would go into making an investment decision? So having already identified their interest and already crafted an offer that pairs or matches with that one-to-one, then when I start the conversation, the first thing I want to come out of my mouth is not about me, but about them. And I want to say to them, I've been looking at what you're doing. I think I might be able to help you do what you want to do. And here's how I think I can be of help. And this is like a test, litmus test, whatever you want to call it, where I'm verifying, validating that I am talking to the right person, I am telling the right story, and that we're talking about something they care about. If they do care and I can help them, then we have a reason to talk regardless of funding. It may be a partnership, it may be a supply chain issue, it could be a membership in some professional or other organization. And we have a reason to build a relationship as a starting point, which may or may not include funding. But if we start at that point, then we're both being good users of our time. We're being respectful of the person we're talking to. And we're not simply sticking our hand out saying, hey, throw some money at me because I'm a small business and somehow I think I deserve funding.
Well, you make some excellent points, because I think in the process, each party is qualifying, right? As a intermediary or facilitator, you're qualifying yourself in front of not only the client, but maybe the prospective future money partner, and how you pick who you pick, how you go to market with those, and how do you make your initial presentations, because everybody's knowing that you're a key element. And if you really show yourself to be exceptional in your area, and I'm sure most, let's say, sophisticated investors have had a lot of pitches, have met a lot of intermediaries, and can measure against that to say, okay, how professional is this person? How thoughtful is this person, and how they take my time up, and how they package things for me. And at the same time, you're qualifying to your client to show that, hey, you are a valued resource as far as not wasting their time either, putting them in front of people who may not be as aligned or relevant, and, trying to get everybody to up their game so that, no one gets embarrassed or no one gets surprised during the process. So, I think those are key, especially when, you're talking finance, you're talking a very competitive marketplace. There's plenty of choices. I know a business thinks of themselves as the only thing that's important out there. But how they share, how they listen, how they come to the table can be so important. Leslie says she's verified it was Jason. Thank you. Leslie says heart centered first, the planet, money second. Well, that's an important element. And I guess that speaks to we've got a question. Investors invest big money. It's hard to imagine they are people first and money second. Your thoughts, Karl?
It's a great question, Leslie. And the thing is that there are people who are money managers. These may be venture capitalists, they may be banks, could be private equity funds. And in those cases, they are working to achieve a rate of return for the people they represent. So they're a pool of money that is there to be placed. But when I walk into that meeting, knowing that that's their job, they're trying to find the right deal. I won't walk into a private equity fund and tell them they're going to get rich. That's not their goal. Their goal is to make sure that the money invested on behalf of their clients is safe, secure, and is going to move them forward. And they also are going to be picking and choosing on a particular industry or a particular maturity of a business. They have all their criteria. But I still get like daily emails going, hey, Karl, why don't you invest in my company? A company, I don't know the people, I don't know what they're doing. They don't know how much money I have, how much I'm going to invest. And anything I do from that point forward is a waste of their time and my time. And so even when I'm talking with someone who wants a high rate of return, who needs a best of kind type of investment, I won't initiate that conversation unless I think the deal actually will match up with their criteria. So even though it's money is on the table from their standpoint, they have a job to do. They have to review deals, look at them, evaluate, do due diligence on them, and they don't have all day to talk to everybody who walks in the door with their hand out looking for money. So if I start off going, I've looked at the way you're investing, and very quickly, I want to verify that this deal matches with what you're looking for, they're very appreciative of that. And at that point, even if they turn me down, they'll keep me in mind, maybe if I walk in the door with another deal down the road. But we've also saved each other time. So if I get rejected, which is a harsh word, but it's basically just saying there's no match, that's not really a rejection. That's just a simple qualification as we've talked about it. I don't match, so don't spend any more time here, and don't spend a whole bunch of time trying to do something when we're never going to get anywhere.
Good point. Thank you, Leslie, for the great question. And with that said, to what extent is your business to the same parties as far as people who manage money, or is it a brand new search every time that you're out looking for money?
This is one of my favorite questions, Don. So thanks for giving me that softball question to work with. Um, I firmly believe that every business everywhere in the world is unique. Even if you have two coffee shops on the same street in the same town that were formed at different times, the management, the location, when they started their business means that their funding needs are different for who they should talk to, where they should get funding. And so, in the other end of the extreme, rather than taking the position that anybody with money is an investor candidate, I believe that every small business may have a soulmate as a source of funding, someone who, for whatever reason, needs that small business to succeed in order to achieve their own investment goals. And it may be that it's an impact investor who says, wow, I talked to one a couple of weeks ago in Western Kentucky, And he said there was no coffee shop within 5 miles of this neighborhood. And so they got together as a community, they formed the coffee shop. And the goal was not to make money, even though we all had a for-profit, sustainable, interest in it, but it was to create a meeting place for people in the community where they could safely, regularly come together and meet in person. And so in that case, we're talking about, yes, let's match up. Let's find the right person who has the great need, and let's talk to them first. That doesn't mean that we're not going to have to work our way down through a number of people where we don't pair or match with, or they don't have the money, or some other reason why they can't come to the table right now. But from our standpoint in raising funding, let's see if we can get it done quick and go home, get back to work on our business.
Great question, great answer. The other thing that comes to mind is how much responsibility does the client have to suggest, let's say, individuals who have a vested interest directly or indirectly in the business, or associations that you might be able to pursue on their behalf, as opposed to they just say, go get them, Karl, and let me know when the check's in the mail.
Yeah, so my services are different from that of a broker dealer in that I don't place myself between my client and the funding source. I'm behind. We'll do this. I'm standing behind the business raising money. I'm trying to be an advisor, a strategist, helper, nurturer, whatever. And they still have to make the pitch. They have to talk to the person they're going to form the relationship with, because it's, even though I may know the person who we're talking to, I'm not running the business. I'm not the one who's going to have to honor the commitment to the investor to give them, some payback in the future. And I want that investor to look directly at the small business and evaluate whether this is a match for them. They may say, Karl, if you're running the business, I'd write you a check tomorrow. And I go, but I'm not running the business, so I don't want you to write a check right away and go down this path. So when we look at this, we want that person thinking about what's there. And if you ask a small business, who should be an investor in your business? Unfortunately, most of them don't have a good answer. In fact, a lot of people come to me and go, I have no idea who to talk to. And I'm like, well, what about this person or this person? And they don't think of them as investors or sources of funding because they have it in their head that it's got to be a rich person, it's got to be a private equity firm, it's got to be a venture capitalist or bank. And even though these are all investor candidates, they may be the least likely to invest in this particular business. And so we have to take that into consideration in developing a capital strategy.
Well, it seems like, and we've talked about this in the past, that if you already have, let's say, companies who have a interest in you, maybe not financially, but maybe a landlord, maybe a major supplier, maybe somebody who you bring value that's not in direct relationship to what you're doing. So some people may want to get more marketing, may want to expose in other words, if you're a major client, they want to keep you in business as much as they can. They want to see you grow your business, because as a major client, as your business expands, then their business should expand with you. So they're a step ahead of somebody who's just pure money in and out. And they may be a better long-term investor because they already have a relationship in place with you, as opposed to people who might have a short time horizon. They're more inclined to get in, make a return, reinvest. What's your thoughts on that, Karl?
Yeah, so when I start looking at all the investor candidates in the world, I kind of start with a blank slate for any particular business because they are unique, and I'm trying to figure out who's the best pairing. I break the world into two groups: those who are looking only for a return on investment, a very classical, sell me some stock, hope it appreciates, and I get more money back in the future kind of thing. And for those people, because they have a single way they benefit from investing, which is getting that money back in the future, unfortunately, that means that every other business that's offering the same rate of return is competing with them head to head for that same investor candidate. So people who may get secondary benefits or other benefits from the success of a business, I call them stakeholders. Some people will call them strategic. There's other that come out for this grouping, but they will somehow have a reason where they benefit from the success of the business without making an investment. So as you mentioned, if I have a landlord who's renting property to me, they want me to stay in business so I can continue paying rents. If I'm buying component parts that go into a product, the supplier wants me to grow so they can sell me more parts and can make more money. And what's interesting is that you will find quite frequently that people as stakeholders can have a greater benefit from the success of a business outside of the investment than they would within the investment. They may make more profits from selling me this product or service. They may get some social cause advance that they couldn't begin to get any return on. That this greater benefit then becomes the primary driver for them to invest. And as a consequence, if they do invest, now they get what we call a twofer. They get the return on investment, but they also get that other benefit. And if that other benefit is larger than the return, I should be talking about the other benefit. I shouldn't be talking about the return, because that's just moving me to a commodity status where I look like everybody else who's pitching for money.
Yeah, that makes so much sense, that twofer idea. And the other element is there might be an inclination, if someone's invested in a company, to give priority interest in that company, right? So maybe there's a better way of getting vendor discounts, or maybe there's a better way of getting dating, because, again, if you buy enough, it usually qualifies for better terms. And raising capital is an expensive exercise, time and effort relative. Well, if I can extend my payables 30 more days and I'm generating, let's say, $500,000 in revenue a month, that could be $300,000-$400,000 in net money that I'm not paying any interest on. I'm not obligated as far as providing more equity, because once a deal's done, a deal is in place. And I think being creative and not having to have as much as you want, because I think everybody would like to have unlimited funds, where you can just say, is whenever I need it, I've got it, it's sitting in the bank. Well, that's well and good, except what did you pay for that money in the bank? And what are you going to get as far as a return, especially with interest rates typically being so low, to say I gave up 15% more equity for $500,000 that's not doing anything. And early money is far more expensive than later money, especially if your performance continues to match expectation. So how do you kind of stage investments with the client to really focus on what do you really need and what period of time, without cutting yourself too short, because the last thing you want to do is go back to the table before you've actually had a chance to develop what the proposition was to begin with. And how do you actually, which is not always easy, exceed expectation knowingly, right? That hey, there's no doubt we're going to hit these numbers, right? Versus it's going to be a stretch. If we put everything together the right way, it may happen, but then you're into the next quarter or into whatever period it is, and how do you continue to scale up and ramp up? So I know there's a lot of stuff to this question, because I think I continue to ask a new question as I go. So I guess putting it in perspective, how do you package and position someone so that they understand, okay, here is the road we're going to be going on, and here's the expectation, which would naturally fold right into being able to package something that could qualify or should qualify.
Yeah, the road is a good metaphor for us to use here because we're going to be talking about going on a journey. We're going to start from scratch where we're barefoot, no shoes, looking at an uncut road through the wilderness. And our thought is we've got to go where we want to go. And so the very first thing that a business needs to do is set a goal that is a time in the future that's on the other side of where they need to pay back investment to an investor. And they need to define what that goal is going to look like so it's measurable. And I use the example that I don't want to say we're going to be better. Better is meaningless subjective to almost everybody. If we're going to hit 2 million in sales or 20 million in sales, and we're going to have a 13.5% profit margin, then that's our goal for that time period. And it's something that anyone, regardless of their level of education, can simply look at your performance down the road and go, did you hit your goal or did you miss your goal? And if it isn't that sharp and crystal clear, then you haven't spent enough time refining the goal. Then with that goal in mind, you go back and you look at all the milestones along this road, which will represent progress in moving from start to achieving the goal. And so you may say, well, I'm going to move faster through this forest if I put on a pair of shoes, or if I get a machete and I can kind of clear out the path. Oh, somewhere along the way, I managed to thumb a ride with a car, and now I'm moving faster down the road. So each of these milestones represents a greater probability of success and a lower chance of failure. And they are things that, again, are observable and understandable to an average investor. And so at each milestone along the road, I ask myself, what resources do I need to get to that point? And I want to make sure I've got enough resources to get to the point. I don't want to come up short. I don't want to be the last mile, like we're out of gas and we have to push the car one more mile down the road. And by planning in advance and understanding what resources are required to reach each milestone to get to your ultimate goal, then you have what we would call a capital strategy. It says, I need this much money at these times to achieve these things. And I've planned everything out. I know what my shopping list is going to be with money that I need to buy. So at that point, when you talk to an investor, if you say, one and done, we're going to do one raise, we'll hit our goal, and we can all go home, great. If you say, no, this is going to take 6 or 7 years, we're going to need at least 4 rounds of funding. Every time we hit a milestone, we're going to declare success for the milestone, but we're also going to lower our cost of money because the risk has gone down at that milestone and it's measurable, recognizable to everybody else. And as we're raising money, our goal is to start, as you said, with the most expensive money when we're at the highest risk getting out of the gate. And then we want to bring it down at each milestone until we get the cheapest available funding that we possibly need in our last round of funding before we cross the finish line and cross our goal.
Well, that seems very methodical and organized, and I think that would bring some level of confidence that people know how it's going to be staged, have some foundation as to plus or minus what could happen, and understand some things are inherent in the business and other things are external, that nature, things like that can't always be managed, but are also typically a one-off and not, like I say, a part of the business itself. I want to recognize Beverly. Beverly's one of the most outstanding individuals, connections, and colleagues on LinkedIn. I learned so much from her. She does every Tuesday with me on the Women's Empowerment event. And just want to share that Beverly just launched her weekly newsletter this week. And I subscribed, and I would suggest everybody else who's interested in getting to know Beverly subscribes to her newsletter, watches her program, and she has her own live stream and podcast that she's been doing for a long time. So I want to recommend that. I also want to recognize Karl and his newsletter, and maybe Karl can share a little bit, but he does a daily newsletter, and the information you're hearing today, you could be reading every day, and it's just as valuable and insightful. There are some newsletters that are just news. I typically have that type of newsletter because it's daily, and my whole newsletter purpose is to make people aware of what's happening this week, what's happening tomorrow, who's going to be on these shows. So, Karl, why don't you share a little bit about your newsletter and why you do it and why and how you see it working out for you?
Yeah, thanks, Don. As Don described, I'm putting out a daily newsletter, and it is a little bit of news. It's a little bit of reference to other resources for people who are either working like me to support small businesses or small businesses looking to raise funding. And each day I'm trying to put in what I call a funding point or a lesson, something that I know that I've gained from my experience that I think may be useful, helpful to either a business supporter or a small business. And today, the topic was, if you're not preparing for success, then you're preparing for failure. And talking about some of the things that are required for a business to get ready to receive capital. And today's topic was about different types of financial documents and ways to present them to put on your best face for the investor. And I started this way back when with Don's coaching and mentorship on December 1st. And today was the 139th or something edition of the newsletter. I've got it written down somewhere. I have to track it because there's been so many. And it's just a constant stream of trying to share information from my 45 years of experience in raising money with hundreds of different businesses. And part of what I'm trying to do in the newsletter is it's kind of a different audience. It's going to have some people who like newsletters more than watching a show like this show, and giving them a different way for me to share information or get that information out to them. And I'm doing other things. I'm speaking tomorrow at the Super Crowd 2024 online event on customer focused crowdfunding. I guest spoke at the Colorado State University last week. So I'm speaking and writing and appearing and stuff, and just trying to give everybody a chance to pick their preferred way of getting whatever information I can share. And so the newsletter is good for that. I'm trying to do a longer Sunday edition where I can add in more detail, kind of like the Sunday paper. Hopefully everybody has time to read a little bit longer, but also trying to be respectful of everybody's time, because if they read my newsletter and then they read Beverly's, they're taking up more time. And then if they read Don's and everybody else's, at some point you're going, I got to get back to work. So it's a constant work, a struggle to say how quickly, how effectively can I share something I think would be of value, and then step back, and we'll talk about another topic tomorrow.
So, I know a lot of people may have their newsletter right now, but I believe a lot more are probably wondering, should I have a newsletter and what can it do for me? So what have you learned from your first edition through the present edition that maybe might help someone avoid some of the pitfalls or challenges to creating a newsletter?
There's a number of lessons learned, as you would expect. Even though I've written newsletters in the past and I've worked with all kinds of medium, this newsletter, I intentionally wanted it to be part of my larger goal of building a community of people who work to support small businesses and raising capital. So I tried to narrow the focus to topics that would be other attorneys, lawyers, business acquisition people, things who cover this broad range. It could be hundreds of different vendors out there, and also products and services that they would buy, which could be accounting software or virtual assistance services, and say, hey, this is for you. So I'm trying to get my message as highly targeted as possible. And that's an ongoing process because you have to look at your analytics, see the comments, see if you're getting feedback, if you're getting questions that are telling you that you confused somebody or they didn't understand where you're going, then you got to get better at that. The other thing that I think was kind of interesting to me, and I know it's a common problem in raising funding, is you want to please everybody. So the first 30, 60 newsletters were kind of everywhere. And then as I got more comfortable with that and I started doing my own successful funding show, I realized that actually to some degree, I don't need to coddle the topics. If there's hard lessons to be learned, whether I'm the victim or I cause somebody the harm, it's okay to dive into those and go, don't do that. And don't think of doing that. If you were to think of doing that, this is a warning. This is a big, don't go here sign. And a lot of things are done in raising capital that are counterproductive to the small business. They're counterproductive to the person who's helping them raise money. And there's no reason to step around or soft pedal those particular problems. So I'm finding that my message is getting sharper in all aspects of the word. And I think that's going to convey more value to the readers of my newsletter.
Well, that's great because, I know that a thought relating to LinkedIn communication is to write and express yourself as if you're talking to a 9-year-old, right? Using that language that isn't over their head, isn't something that someone has to be sophisticated, because you're really dealing with a general pool out there who may have a fleeting interest, may have some desire to learn more. They may not be in the market to raise money, but they're intrigued, just like Leslie said, now she learned a little bit about VCs. Everybody learns a little bit. The other thing I'm noticing by not only what I'm doing, but what people who I'm collaborating with, like Carl, Beverly, Dave, Con, Kelly, Harvey, is that you have to remember they're not as focused on your newsletter as you are. I see a lot of people using, let's say, if they're a daily newsletter, using Sundays as a recap of all their newsletters, right? In case you miss this, Monday we talked about this, and here was the important point. Because just like we talked about, if you're going to an investment group, you got to be very thoughtful towards their time. Some people will never read beyond the headline or the first paragraph. And if you don't catch them there, you're probably not going to catch them at all. So how do you justify someone's time, effort, and interest, like you said, who has so many different ways to invest that, to make it, I guess, a combination of little interesting, little entertaining, and just to this topic, you're qualifying yourself in a way by how you write, by how thoughtful you are, because that gives everybody a little deeper appreciation for you than someone who just looks at your profile, and skims the surface. To really elevate yourself as a thought leader, as someone who really knows their stuff and can really benefit you. I guess getting back to qualifying, well, Leslie has a question. The milestones are the tasks, and the goal must be crystal clear and compelling. I think what we also have to talk about, which gets beyond numbers, is chemistry, right? So who would be a good fit based on who you're representing? Do you want somebody who's a little bit more into that area, or someone says, hey, they'd be a great match, right? The way they conduct themselves, or you might have a quirky client that needs a little bit more hand holding or a little bit more patience, because I guess you can go from one extreme to the other as having someone who's too exuberant, too positive, everything is going to work out, to the person who always sees, risk in everything. There's a saying, an optimist. I can't even remember the saying, but it starts like that. So before I go too deep into something I'm not ready for, Karl, what do you think about matching people with the right people who can work with those people best?
Well, there is a definite, again, pairing that takes place between businesses and people like myself in style, knowledge, desire, to work with someone like that. Um, when I work with entrepreneurs, I may have someone who's never started a business, doesn't understand what a business is, doesn't understand a product or service, doesn't understand sustainability. I mean, we could say they just don't know. And that doesn't mean they can't be an entrepreneur. It doesn't mean they can't be successful, but they have a longer road to walk before they're going to get where they want to be. And along that path, um, most entrepreneurs default to I'll figure it out myself, which means that they're going to typically fail more often. They're going to spend more time and energy getting to where they want to go. And there is definitely this ongoing learning curve. It's like you're always every day trying to get better at what you do. But there also comes a point where you should stop and go, I still want to achieve my goal. If I keep depending just on myself, I may not get to my goal, or I may, so poorly complete my goal that it's not worth the time and effort. And maybe it's time for me to reach out and find someone who's been there, done that, who can help me get where I want to go. And so there are a lot of people out there who have tons of experience that would help an entrepreneur speed their path down their own road. Then there's yet another question, though, is how well can they work with that expert? Some people can communicate clearly. They can bring it down to whatever level that the entrepreneur is at, put it in words they understand, enable them to become better while also learning from that at the same time. And that's something I work with all the time because it is so hard sometimes where you're listening to the person, they're nodding their head saying, yeah, I heard what you said. And I go, no, you're not understanding anything I just said. So you're saying, okay, let's give you an example. So using training that I have in working with entrepreneurs on how to train entrepreneurs, I start off with, here's a truth. Here's something that should be something you can stand on all day long and it won't change on you. Then let me give you an example that may be close to your situation so you can put it in perspective. And maybe I can give you 2 or 3 examples so you can get different perspectives. And then I'm going to ask them, I said, so how would you do this in your situation? This is a test. It's an exercise. And if they give me back what I want to hear, then I know that they got it, they understood it, and they may be ready to apply it to themselves. And if it comes back wrong or half correct, half wrong, then we have time to have a discussion as a last stage where I'm saying, here's how you could do that better. And I want to make sure, again, that you understand it. Because if you don't understand this building block, everything you put on top of it could topple somewhere down the road. And it gets more expensive the higher you are as you go along. So let's see if we can get this out of the way early and keep on moving. So when people say I have a client who's looking for this kind of a person, I may find I'm not a fit. I may know everything they need to know, but for whatever reason, they either don't get it, they don't fully appreciate the help that can be brought to the table. They may not have funding, meaning that they're broke. And as much as I try to help a lot of people, there are limits to how much you can do for free. And so you do that, but you'll find some people just work better with others. There's some people who can work with that brand new rookie out of the gate entrepreneur and just sit with them and mentor them and help them move forward. We had Alan that I was on the show with last Friday. He's doing a mentoring program where he's matching people with this. And that takes, again, a certain type of personality to work with an entrepreneur at that level. I have found that my preference is to work with someone who's been out there and done that often enough to go, I want an expert on fundraising. I don't want to nitpick or micromanage the project. I want to depend upon them. And oh, by the way, I may have a problem that's a little odd or a little weird, a little exotic that needs a little creativity to come in and help make this really happen. So it's not the same old thing for me. I get to let my creative juices flow and try to solve a problem. But it's a professional relationship where everybody else that they're working with are also experts who are also professionals, and you just get so much more done, and you don't have to explain everything all the time, and it's a little more less stressful and more happy, more fun to engage in that kind of a project. But occasionally I'll see something where I go, wow, this project could have great impact. It could be a great help. And I try to help them move forward. Sometimes I'm successful, sometimes I'm not. And that's frustrating for me that we couldn't, get this new product or service to market. We couldn't help this entrepreneur be all they can be. And that's just part of the business, though. If you think that you're going to have 100% success, you're dealing in the wrong business if you're dealing with entrepreneurs.
Yeah, that makes so much sense. And I guess what comes to mind is finding strategic partners. We talked about strategic. So let's say someone's, an investment group, and their expertise is in real estate. And if you had a company that was looking to expand into multiple locations, having somebody who had that expertise and know that network of connections may have more value than just someone who's going to put in more money at a reduced rate. And now all you've gotten is the money, because, it's interesting is everybody's looking at that closing, but when the check cashes, now you're with the people and your proposition you proposed. If it was a sale and it was just I sold it, you have it, I move on, well, that's not as important. But they could make the difference in critical situations, critical decision-making situations that could be worth everything to that entrepreneur. What's your thoughts in that area, Karl?
Yeah, I think this is another common mistake of entrepreneurs, small business owners, and leaders is anyone who can write a check qualifies to be an investor. But that'd be like going on into an ice cream shop and saying, I want vanilla ice cream in a cup when I could have had it in a cinnamon snow cone, and I could have had brownies and M&Ms and 20 other things on top because it's better. So if you have a choice between two investor candidates, why would you ever pick the lesser candidate who all they can do is write a check, when if they can open doors, they can buy product, they can endorse you, be an advocate to the world, they can do 20, 30 other things, you should start with those candidates because you're going to get the most value from them over somebody who can just write a check. But we tend to get too late in the game, trying to raise money too late. I got to make payroll, so I'll take the first dollars that become available. We're planning and preparation, doing that capital strategy, thinking about, every time I'm coming up to a new milestone, I need to be starting a new capital campaign, planning, designing. And in that, I want to pick out who are going to be my optimal investor candidates, who can help me the most, and spend the little extra time and money to go through that analysis rather than just hunting for checks.
Well, that's so important. And the more I think about it, it's understanding and appreciating the premium value add that someone brings, right? In other words, it's on both parties' responsibility to say, hey, before we get too deep into it, let me share my experience, right? So the more sophisticated the client is, the more sophisticated the investor is, to say, here's what you should value this. And maybe our next conversation comes to mind is valuation. Is let's not just look at the numbers, because the numbers are the easiest things to see. You know, if it's raising $2 million, if it's at 7% or whatever, whether it's subordinated debt or other vehicles that someone can use, is saying, hey, you know, in a sense, what you're hoping for is to expand your advisory board, right? So that people have that expertise to say, you know, not only will I report every quarter or whatever period that's expected, but we're going to meet and be happy to meet in order to kind of go over what we're doing. I'm sure some investors are like, hey, I'm hands off. You know, all I want to know is give me the numbers, make sure everything's tracking well. And if you're doing well, then you're in good shape, versus how can we both come together and secure this investment to make it safer, to make it more understood. And, you know, I've always said, if you want to solve a puzzle, why don't you buy some vowels before you really make that decision, right? And because sometimes it's a critical decision, you can't go back, right? You can't say, oh, whoops, well, that's too late. You're already involved. You're already committed. Now what you're doing is you're dealing with maybe a headwind that didn't have to be. And all of a sudden your business model starts making accommodations, or your timeline gets stretched. And pretty soon you're into repair instead of expansion or growth. And I guess that's an important role you play, is really defining, here's the difference between these groups. You know?
Yeah, I find that as much as I understand the regulatory issues and I can put together the different documents and so forth, where I bring greatest value is right at the front end, where I sit down with the business and I start talking about who loves you more than you love yourself, who is from a marketing standpoint is the lowest hanging fruit, which is going to yield you the greatest benefit from this relationship. Because if we can figure that out, then everything else kind of falls out from that. I don't have to worry about, you know, this, that, or the other in my offer, because I'm already know who I need to talk to and what they need to hear. And so it's very important at the outset to do all this advanced planning. They talk in software that, you know, it's not the coding of the software, it's the design of the system that is where you need to spend the money. When you get to coding and talking to the computer, they actually don't want a lot of creativity taking place at that time. It's kind of the same way in the middle of a capital campaign. You don't want to be, you know, 2 months in and go, nobody's writing a check. Well, why is that? Well, I just assumed everybody with a check would come and give me a check, and I wouldn't have to talk to them, understand them, know them, or do anything else. And yet, unfortunately, this happens all the time everywhere. And you know, I will sometimes have somebody walk in and go, I worked for 6 months, haven't raised a dime. And I go, well, who are you pitching to? Wealthy people. I go, that's a little ambiguous. Can we get a little more specific? And then I go, what are you offering a wealthy person? They're already wealthy, so you can't make them rich. So what else are you offering them beyond just writing, you know, give them a check? And they'll go, well, I offered a like 25% rate of return. I go, well, every other business offer 25% rate of return is just as good as you are. So now what did you offer them? And we keep, you know, kind of pound it in. Sometimes people don't get it. It is a frustration when people go out and go beat their heads on the wall one more time, doing it the same old way, and won't learn how to do something in their own self-interest. It's frustrating. Those are generally ex-clients who no longer work with me.
Well, it's kind of interesting because, you know, to that point, picking the right players to engage with, at least to share and see if there is interest, has a lot to do with what you present to them too, right? So we talked about walking up the right ladder against the wrong wall. Could be just the perfect group, but you're not presenting in a way that they're related to or aligned to, and instead of really examining every part of how you're going to market. Because I think a lot of people have tunnel vision, right? The only thing they care about is, hey, it's my business. Here's what I need. Here's how I want it. And the world should come to my doorstep, versus having those conversations with an individual like yourself. Because there's a difference between looking at somebody as being expensive and being valuable. And a lot of people try to cut the corners where they should be expanding those corners, right? A lot of people don't get a quality accounting firm, and they save a few dollars, but there's very little credibility, or they're not willing to make an investment in doing an audit if they don't have one. And again, depends at what stage, how much money, everything else. But really go into the market in a way that someone can kind of check you out, look for maybe some things that are going to come up, right? So as you act as if you were the investment group, saying that what you shared with me is going to create these questions. If you have great answers, but how do you avoid even the question? And a lot of times it's getting out in front of it and answering the questions you're going to get before you get them. And it shows that you're aware of them. Nothing, you don't want something just to slip through, right? Because it does tell you who it is that's looking at it. And if they can't catch a red flag or something that's glaring, maybe they're not the right group. And I think the other thing is timing. Some people probably go to market way too late, where they needed the money 6 months ago and they tried to keep it together. And all of a sudden it's like they can't. And now they're going out with a tin cup, kind of needy and begging, which is never a good position to be in, because it'll either scare people off or it'll make them exact a lot of major concessions. And I think the goal is when you finally do a deal, everybody goes forward optimistic and excited, versus got dragged in, or I had a deal with this and I paid for that. And all of a sudden they're making the other person the bad guy when they created the situation in the first place.
Yeah, it's unfortunate that again, too many businesses don't adequately prepare to go out and raise funding. They don't. And part of it is they don't understand, and I mean fairly, they're not in their experience. Their experience is limited for whatever reason, and so when you say, "Well, I think you should get an audit," they're going, "But that's expensive." And I go, "Yeah, but if you want Joe over here to invest in this deal, he only does deals that have been audited." And so we're not going to cross that chasm without you getting an audit and going along on the path. And so there are moments where you have to kind of school somebody on what that enough that they should trust you to fill in the gaps. Because if you just sit there and told, well, I'm going to tell you 45 years of history about raising capital, nobody's got 45 years. Nobody wants to do that. But it's interesting that I've found in my newsletter that I don't have to talk about myself, that as you say, and on this show, you ask me a question, I answer it. Hopefully it's a correct answer. But the thing is people who listen, people who view this show, they'll see me talking and they'll go, oh, I hadn't thought of that. In fact, the most common feedback I get on my newsletter was, aha, I didn't think of that, or I should have thought of that. And it's like one more thing that they stick in their portfolio of knowledge. And by doing that, they're going, well, Karl knew that when I didn't know that. So somehow I'm elevated as a little bit of an expert, or maybe a big expert, we'll see. But these are all the things that you can't know enough. You can't do everything. You can't be an expert in everything. You have to have a team if you're going to do anything of any glorious size and scale. And having your core team, a board of directors, a board of advisors, your family, as you describe it, Don, which is kind of a second circle or third circle, and then you have your community outside of that of people who will support you. You're building all these relationships that are assets that you need to have if you're going to be successful. And it's particularly true in raising funding.
Yeah, I think that's so important. And what brings to mind a newsletter, live streaming, what you're hoping to do is gain top of mind awareness. So when someone says, well, my brother-in-law's got a great business, he's looking for funding. Well, Carl's name is going to come to the forefront over someone who hasn't been out there consistently. And that's what you're hoping for, because the question I always get is, how do I monetize live streaming? How do I monetize LinkedIn? That same question is like, how do I monetize my telephone? You don't make money off of your phone, you make money with your phone. You don't make money off of live streaming. You make it by using it to raise the level of appreciation of your expertise, of how you handle situations, how you address questions, because it gives everybody a preview before they have to reach out, because most people don't know anybody. If I said, hey, you need a corporate lawyer. Well, where do I find one? Maybe they'll go to some list or whatever, but then who do I know there? Right? So you can go to a major law firm and you can get a junior partner, versus having somebody who's just maybe a smaller boutique who's focused on your area, that you'll get a higher level person. And I think it's comfort level. And I think that also is a major factor in achieving or not achieving something, is how comfortable is everybody with everybody from the start? Or does somebody have to work from behind to catch up, or never catch up and always leave some doubt or issues? So, I think by what you're doing and how you're doing it, and no one knows the loop. Everybody knows the starting line, but doesn't know how it goes full circle. Is it 6 months? Is it 200 episodes? Whatever it is. But, I think the last thing is, you get smarter the more you do what you do, and you're reading what you're doing. You're preparing what you're doing. So it's kind of like exercise. You're building your live stream muscles, your newsletter muscles. And the more you do, the easier it is, because it just is a repetition of what you've done, and not trying to bite off more than you can chew, not doing something that isn't sustainable, that, oh God, I got to do the newsletter now, versus, hey, I got six subjects I can't wait for. So anyways, we're a little bit over. Want to thank all my lovely members of the audience, Beverly, Leslie, Dennis, and everybody watching, and especially Karl for bringing a wealth of knowledge and resource to it. And, I think third-party validation is so important, and association. So when I'm sharing wonderful things about Karl, it's sincere, or Beverly or Leslie, because I've had experience over time with everybody. So last words, Karl?
Yeah, thanks again for letting me be on your show this morning. Happy to talk about funding incessantly. And as you said, the more opportunities you have to share what you know, and most importantly, the more opportunities you have to see how people react to what you said, it improves your ability to communicate. And because speaking is less than half of the communication activity, listening is dominant. And so, yeah, it's good to be able to sit here and talk and answer questions, help people understand a little bit more about funding. And the more I see the questions and the comments, it helps me. So I thank you to the audience.
Well, thank you, Karl. Thank you, audience. Come back in 23 hours. We'll have Kelly with us. Let me see if there's anybody else with Kelly. No, tomorrow it's me and Kelly. Next week we have a new guest with Kelly. So anyways, everything changes, and that's the beauty of being in a dynamic world and marketplace. And with that said, go out and have a wonderful day. Qualify for whatever it is that you've been looking for in whatever area of life or business. And thank you again. We'll see you tomorrow if possible.